Yeah, so I mean, the markets are still kind of watching every headline coming out from Russia and Ukraine, right? Friday we saw that gap up initially, or I think it was Friday, and the markets had gapped up after supposedly Putin had said something positive about maybe negotiations, and then I think it was very interesting to see how the market, after just a little bit, I mean, very limited upside, it opened up and then right away started to sell as people said, listen, this guy isn't some guy that you can trust in what he says, and there's no troop movements to signal any pullback. They're still bombing, the crazy amounts there in Ukraine. So the market really sold very sharply, closed at the lows of the day, which is not unusual for a Friday when the markets are closed for 2 straight days. So people don't want to be buying into Friday when you have a war that could, I mean, God forbid, could escalate and draw in more countries or NATO. I mean, there's just so many risks right now that it makes it very tough to be someone who's just accumulating.
Yeah, investors love clarity, and
Yep.
it's the markets are very knee jerky to any kind of news, and that's more typical of a bear market behavior, reacting to any kind of news, because it's not just what's going on in Ukraine. It's any news that comes out. The markets are very knee jerky to it. You don't see that so much in the bull markets.
Yeah, you're right. In fact, I vividly remember how many, I mean, in the last prior to this year, 2022, but, going back to late 2020 and 2021, I mean, there would be news that would hit that you'd be like, that's not good news. And then the markets would sell for like an hour and then boom, off to the races they would go. And you're right, way different market environment. The psychology of the market is 100% different.
Yeah, and technically, it's only the Nasdaq that's in bear market territory,
Yeah.
where still correction territory for the S&P and the Dow.
Yeah, and I think it makes sense. Considering that if you look at the percentages, the Nasdaq was the one that had the biggest gains during COVID, especially. So it makes sense that that one would be falling the hardest. I mean, there are stocks getting. I mean, I've been accumulating. Last week I really did take some initiative and start accumulating plays. Zoom. I mean, some of these charts are just getting to the level. Yeah, so I mean, notoriously stock splits, right? I mean, I want everyone to really fully understand that nothing changes for the company, just the share price and then the amount of shares outstanding change. But it is a way to kind of artificially keep your price up, and it does give buyers of options. I mean, it makes options a little bit cheaper, so you don't have to. Someone, you remember, you can't buy partial options. You can buy partial shares, but I don't believe you can buy partial options. So for a lot of investors that like to play options, they're just not able to play Amazon prior to the split. So I understand it getting a little bit of the upside. To me, I look at the chart and it still hasn't corrected enough to make me feel comfortable. You can see that you're now trading kind of in this range where if you connect these lows, you're just kind of dangling right around this breakdown point. And that's what you don't want to see. You don't want to see this really break lower. If it does break lower, I think you're probably headed down towards the 2000 level on the chart. But yeah, interesting news. I mean, we've seen Google announce it. Apple did one not too long ago. Obviously, Tesla was a big one. But remember, Tesla did it during a bull market. So it just got amazing price action. You're now in a different environment where I wouldn't expect the bullishness to last quite as long.
Yeah. There was a little pop on the news, but I think
Mm-hmm.
historically, when you look at stock splits, they don't necessarily exponentially increase price of the stock. It just makes them more accessible for people.
I mean, Amazon is the biggest retailer in the US. So there's no way they would ever put Amazon in at $3,000 a share into the Dow, because it would literally dwarf every other company in the Dow, right? And that's what Apple did, right? Apple did the split and then they were able to get in. So maybe that's the angle here too, is maybe they're thinking, all right, well, we should be in the Dow, we should be in that index, and this is one way to kind of open the door. It does. It absolutely does. And again, you're right on this major trend line. Let me show you this, because this is really, I mean, this trend line we hit just maybe 2 weeks ago right here, and you had the big reversal. This was when the invasion first took place. Now you're back into that line again. And you have to say that the more times you hit a level, the more likely you break. And again, I love the analogy of, like, if you're on one side of the door and it's locked, and you need to save someone on the other side, you may run against that door as hard as you can. Probably the first, second time, maybe it doesn't break down. If you keep hitting that door with all your might, eventually it breaks down, right? It's just a matter of how many times. So essentially, this trend line is a door, and you've now hit it very many times, and most recently just about 2 weeks ago. So there is real risk that Apple could now be the next one to see a big decline. And hedge fund managers and institutions are so overexposed to Apple because it's been a darling for so long that really that could be a major collapse play where you could see it take down the markets overall, especially with the size of that company.
Yeah, pull up Google real quick because I think Google's
Yep.
tracking kind of the same thing.
Yeah. And at least Google, I feel like Google, at least from a fundamental point, has a little bit more earnings growth and than Apple. I mean, I've always been marveling at Apple how it kind of is trading at this multiple that doesn't reflect kind of the future growth. I mean, everyone said, oh, the App Store and this and that, but the App Store, I mean, again, comparative to their overall business, it's not that big. They still haven't announced an Apple Car, which was thought. I mean, there's so if you just look at what they have, it's definitely not a growth company. Probably should be trading at like 15 PE, and it's definitely in the mid 20s at this point. Here's your chart of Google. And again, Google, same kind of thing. It almost Amazon-ish, right? You kind of have this area right here where it's just been trading sideways inside of this range, and you're definitely hammering on support. It hasn't broken yet, but this is a chart. I mean, this type of chart pattern is a topping chart pattern. I call it kind of like a 3-mountain top, where you have these multiple times where it tries to break out and it keeps failing. And it's kind of like yeah, I mean, he very well could. I'm still in the 25 camp just because, again, the longer this war goes on and the more chance of the U.S. or someone else getting drawn into it, it increases the longer it goes on. I mean, it definitely raises that economic issue where I do think there's going to be a point where everyone's going to applaud the Fed, right? So you're going to have this scenario where at some point Russia and Ukraine, they figured it out. Things maybe get back to a little bit of a normal thing. You have the kind of the supply shock, which is a huge part of the inflation, come off the table. And you'll see inflation going from like 8 or 10% or whatever back to 5%, right? And everyone, you're going to watch this. The media is going to be all over it. Like, oh, Powell knew exactly what he was doing. But the problem is it's not going to go below 5% or so.
Yeah.
And then again, you get in the same kind of repetitive situation is, okay, well, when we get into a recession, then they print more money, then it goes back to 10%. And then, how again do you handle it on a continual basis when you have elevated inflation? I mean, when it's 2 to 0% inflation, it was easy, but now it's not.
Yeah, very difficult. And given the fact that the economy is so strong, we have more jobs still than people willing to take them.
Yep.
There's just so many things that the Fed is up against in terms of what they can do and how fast they can do it. And we are definitely really you got to have demand destruction. You got to put the country in recession. I think we're looking at a global recession now with what's going on. The question is how deep will that go and how far will that go? Because there's really nothing they can do to stop it. And these things take a couple of years to unwind. Like this isn't going to reverse course from an inflationary standpoint. A lot of people think Fed could come out, raise rates, stop QE, and we can taper inflation.